Well, hello folks, I'm L.A. Little and this is your daily TA wrap, where we take a look at these markets. Well, we do it from a neoclassical perspective each time, asking ourselves what happened today and what might it tell us about the coming days. I do a show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time here from the base of what is the most beautiful of the Rocky Mountains. Folks, I'm glad you could join me. This market, just like the beautiful mountains, is on a beautiful run itself. It just keeps going up. I've seen so many V-shaped reversals that it's getting hard to even imagine another one, but they keep coming. Industrials up by 65 points, 16,514, almost at the highs again. S&Ps, same thing, 7.5 higher, 1879.5. Composite, almost 1% higher, 39, almost 40 points, 4161.50. Index 2885, almost 1% higher, 3588, almost 3589, and the Russell was the winner today, up over 1%, 13.3 higher, 1155.60. We actually had oil down today. Gold was down slightly. It's up after hours. Bonds were up again today. Dollar was up down slightly. Bonds, you know, markets, everything wants to go up again. And, you know, I've seen this picture so many times. It's kind of amazing. I'm going to start with the Russell, because the Russell to me was probably the key, the index, right? The key index. We have had multiple chances to break a retest, regen, to get higher. And those tests, each time they've come, you know, they haven't failed necessarily immediately every time, but they've failed within a bar or two. Well, it's over the top again. If it's going to fail, it has to start failing right away. This suggests, and it's going to have a test tomorrow of that breakdown bar, which I'm suspicious is probably going to turn it back for now. But I want to go back. I want to clean up the chart, and I want to just go through each of these on the way down and talk about, you know, the scenarios. So here was the first break. You break 2 swing point lows. You break this one and this one on this one move down, this bar down. So then you have a retest regen here, right? It comes up, it gets over it, keeps going. You have a retest regen here. Gets over it, keeps going. That's the first time off the top and breaking swing points, and it gets a heck of a bounce out of it, yet it still breaks down again. So just because it retests and regens doesn't necessarily mean, right, that you're going to go higher. What it means is you're probably going to go sideways for a while. Now, it turned out that sideways here really wasn't but a bar or two. Sometimes it doesn't work like it's supposed to. You know, and any system, any model you use is fallible, right? Now, most of the time it actually does do what it's supposed to, but realize when you're coming back within 6 bars, the probabilities are a toss-up that you're going to hold that regen area. We're coming back within 6 bars every time down. So the first time down, it didn't hold, right? Next time down, that's this one. Breaks this swing point low. What does it do here? Comes back up right to the top, retest, regens lower. That's as it should work. If it's going to go lower, right, it gives you a good probability case where it starts to break down, you know it's going to go lower. That's exactly what it does. What do we do this time? This time we come back up, right? We do the retest regen off this wide price spread bar. We get over it, right? We're back over it again. We're now back up to the retest on the breakdown bar. 6 days or 5 days straight up, 6 days on other indexes. Actually, this is, it's actually 6 days up. 6 straight days up. Even though you had lower lows, and you've basically had 5 days without a lower low now, or 4 days without a lower low. But still, the point is you're back up here, you're testing. It wants to try to go to a sideways trend again. So far, it hasn't been able to do that. Today's action suggests it's going to try to do that again. Of course, it is going to get a pullback. It could come as quickly as tomorrow, and then the test will be is what does it do on the pullback. On this particular index, it really should not violate this price point. And there's multiple reasons for it. You got a hammer reversal here. The bottom of the swing point, prior swing point, wide price spread bar is there. This anchor bar is there. You got a lot of stuff that lines up on that price point. If it were to come back and break this again, I would have to say that this retest regen is fooling us again. And it's done that twice out of the 3 cases. It can do it again. We all know that down here some real issues if we get down there and break. But right now, once more, this market refuses to roll over. It's pushing back to the top side. I suspect that the thing that's going to roll us back over, if we're going to get it, is going to be economics and earnings. Now there's the exogenous potential in that, the Russian thing is starting to flare up again. And maybe that brings us back down, but I don't think that is going to keep us down. What's going to keep us down and what's actually going to drive this market lower, if it's going to go lower, really is economics and earnings. Earnings, they're okay. I mean, they're mixed. They're not as good as they should be. And when I say that, yeah, you're seeing them beat the estimates. Well, they always beat the estimates because the estimates always get lowered down to a point where they can beat them. We could probably go back through history, and I don't have that kind of data in front of me, but I've done this long enough to see the estimates always get pulled down so that you can jump them. It's like, bringing the rope down to the ground, so all you got to do is step over it. So that part of it is always the same. It's like how many of them are beating the estimates, though? And when you look at that, you've probably got, 55, you probably got more. You probably got 60% of them beating so far. Usually it's 70, 75. Right? Because most people aren't going to surprise to the downside. They're going to lower those estimates into the earnings so that they beat them by a penny. Everything's beat by a penny. So that part of it's not. The economics, though, you've had 3 or 4 strong numbers now. Remember, we had all the weather-related, it was the weather, it was the weather, it was the weather. Well, that's behind us, and now you have to get better numbers. We're seeing some better numbers year over year. We're seeing some better numbers month over month. That's what's pushing this market. You got flash PMIs coming out tomorrow. You have them in China, I think, tonight. You have them in Europe and the U.S. tomorrow. Europe overnight, U.S. tomorrow. Those numbers, big numbers, right? They're big numbers in that they are the closest to what is happening now. If those numbers are strong, this market's going to try to walk higher. And that V-shaped stuff is going to try to continue. If they're not, it's going to have a hard time. Because I believe the economics are probably the biggest factor. Earnings behind them, exogenous behind them. And right now, the economics are driving this thing back up again. If we go, and the reason this is big is that you get over it. It doesn't mean it changes it. It just says that the probabilities favor you to go sideways at this point. GSPC. If we go to the S&P. S&P had already gotten over all the swing points, and now it gets over the breakdown bar. And that was a big bar. Now it does it on a lighter volume again. I mean, what else is new? That's usually the case. But it's coming back up. It's up into resistance. Tomorrow this will redraw. You'll have one resistance line left up above. So the only thing now stopping this is the highs. And if you draw in the zones, right? Remember for a while there we had this zone, and that was the zone we were playing with. And then we kind of poked out of the top of it and we poked out of the bottom of it. But neither side could extend that. You couldn't get the extension here, you couldn't get the extension here, and that was even after breaking multiple swing points, which typically gives you a pretty good extension. It gave you the 2 to 3 bars, but it didn't give you any extension off of them, other than the first one. Now we're coming back up. We're going to go back up and test these highs again. These swing point highs have already been broken, so they're a no-op. All you have is this one now. But you're coming back up, you're going to test. You're at the top of that zone. It's going to be very hard to rock this thing on up again, right? Especially after 6 days up. And so I would think that, the pullback's coming, but so far, unless there's something to come in here and intervene and say, hey, economics aren't as good as we think, or, the earnings are horrible. I doubt the latter is going to happen because of the way the bar gets set. It's going to be economics that drive this lower if it's going to get lower. And I'm sure there's going to be a report somewhere in here that's going to scare people and they're going to sell again. But right now, this market has done what it needs to do, right, from a bullish perspective. It's come back up, it's taken out the regenerates, it doesn't want to regenerate lower, it's back up at the highs, it's over this bar. Indexes themselves don't look bad. The test now, if you're continuing to look for confirmation, we just saw it on the Russell, you're going to see it on the NASDAQ, it's getting back over the breakdown bars. Russell's going to attack them first, probably tomorrow, has a shot at them. These other guys, it's going to take a little bit more juice to get them up there. If I go back over, though, to the sectors, because the sectors drive the market, right? Some sectors, standouts. IYT, we've talked about, is strong, continues to be strong. Earnings in that group has been strong. You can go down the list, UNP, some of these others, they've come out, earnings have been great, they've popped. There's a number of these. Another one is like JB Hunt, I saw, did earnings, it got a nice pop. So you're getting transportation up, right? That's a good thing. That says goods are moving around. That's what you want to see. Then if we go over and we look at the other strong one, that's been the XLE. XLE stagnates a little bit here. No volume last 2 days. OIH itself continues to grind higher. Services companies, and I keep seeing those report good numbers. Those two sectors still up there hanging, doing well. Those are the two strongest ones. Then you go to the ones that are trying to do something. XLB, up testing the breakout, the breakdown bar, gets over it today, just barely over. It doesn't have any volume as it's doing it, but it's over it. So that's a positive. But then I go to the ones that really should be trying to do something. XLI got over it. XLI is kind of stagnating as it's getting towards the high, but that one still looks okay. But then XLF, not so okay. Coming up to test that bar. This one has to get over it. This, to me, sector-wise, big hurdle. How do you get over it? 2207, you're at 2205. That's a tough one. XLK, technology. Technology coming back up to the breakdown bar. That's another one that needs to get over the hurdle. XLV, that's been a weak one. Well, biotech takes off today with the merger acquisition stuff going, full blast today. Biotech helped push this up. 58.25 was the breakdown bar. Gets over it, back under it, a lot less volume. That looks like a failure on that bar. XLY also has been a weak one. Coming back up, gets over it, back under it, less volume. That looks like a failure. So when I look at those guys, I've got a couple of them still failing, but for the most part, sectors still supporting the move, still looking okay. So then I walk over and I say, okay, what's going over here with bonds? Why will bonds not sell off? If the economy's doing great, if earnings are great, if all these things are good, if the Fed's tapering and taking away demand from this, then why in the heck don't bonds fall? Why do they keep going up? Certainly we're past the allocation out of stocks into bonds. Why do bonds hold up? And as I've said many times over the last 2 or 3 weeks, I can't think of any reason for bonds to go up other than fear. And so even though this market is up there knocking at the highs again on the listed issues, and the Russell has successfully failed to regenerate, people still want bonds. You know, institutions still want the bonds. They want safety. And that just tells me there's still fear. Now, whether it's going to switch around and all it's going to stop, you know, we'll have to see. But right now, every time he comes back in, this is doing a retest regen itself. And this one was within 6 bars. 2, 4, yeah, it was within 6 bars. So the retest regen is off this prior high. And I draw it that way because this one's not right. I got to get that quote fixed. This is really the high. I'm almost certain of that, but I keep forgetting about it. I got to go back and look at it. Let me just give me a second. Let me make a note because I'm always forgetting this. Fixed bond quote. Sorry, but if I don't make a note, I will forget it again. I need to do this. I need to go verify that that's really not a swing point high. I don't think it is. Point is, it's doing a retest. It looks like to me it's going to regenerate higher again. This thing has walked higher and higher time over time. Right? It had this big zone it was playing in back here. There was 3 parts to it. Remember, it got over all these. It's up here building another one now, about equidistant away, coming back in here, flips around. This thing's going to go up and test the tops again. I don't know if it's going to break out this time or not, but it looks to me like it's set up another ABCD structure to the top side, right? To try to break it out again. Bonds, if there's a worry wart, it's the bonds, and the bonds keep worrying for whatever reason. And I don't always know the reasons. I just see the action, and I just know that that's what's happening because I can't think of any other reason that makes sense. If I go to the counterpart and I say, okay, what about gold? Right? That's a worry wart too. It's kind of a substitute currency as well as a worry. It can't get off the ground still. It does come down, it tests this low, test it with higher volume though, does flip around, has higher volume yesterday, and the good part about it is not only did it test this low, it tested into this prior high. And there it had more volume on the prior high. And I think it actually got to the top. 122.51. No, just missed it. So a little bit more volume on that swing point low makes me think it's going to come down here and do it again and try to test into this. That's probably where it's going to find support. But right now, it's finishing off what has turned out to be... And no, it already finished off that ABCD structure. Now the question is there something else going on here? This actually is not an ABCD structure. It just didn't set up right. So I don't know. It looks to me like it's just range trading, but it's going to test again. But gold can't lift. If gold can't lift, then we must not be worrying too much. Or at least we're not willing to put, I guess you get some return on bonds. You get nothing on gold, especially the physical. So I'm not sure that gold's telling us anything. So then I go over and say, okay, well, what are the other types of bonds doing? Junk bonds. Are they skyrocketing because we're, not concerned? No, they're not. They're hanging back here. They kind of support the ideal with bonds that, maybe everything's not rosy as we think it is. So then I turn to the overseas and say, okay, what are they doing? Because they did trade last night after the long weekend. The CAC's going after the highs. Doesn't have the volume, but going after the highs. Looks like it will test it tonight. The DAX had good economic numbers. Again, coming back to the economic thing. Got a nice big push off of it. No volume, doesn't matter. It's going to go up there and try to test into at least the low and potentially the highs. The FTSE. That guy, been the weakest one for a long time, still is going up testing the highs. Doesn't have the volume, but testing the highs. So you got all of Europe gets a nice bounce. Maybe tomorrow they all come back down on the Russian news because the Russian news started heating up at the end of the day again today. But if I go over and I look at, Oh, what am I looking for here? I want to go, let me go get my quotes up. HSCE, it's the new one here, HSCE. This is the Shanghai shares on the Hong Kong exchange. They can't lift. And then I look at Hong Kong itself. It can't lift. It's not trading, it's not, selling off, but it can't lift. So then I say, okay, what are the other quote-unquote emerging markets doing? Brazil still hanging up there at the highs. Doesn't look bad. India, same thing. India's been actually the strongest. It's testing those highs. It still looks fine. If I then go over to our friend the Japanese, who now are suffering from some of the adverse effects of their wonderfully thought out policy of flooding the markets with money and devaluing their currency. They now have the largest trade deficits ever in their history. They can't get going, and I suspect they're going to break out these lows before they're done. The brilliant strategy they have. And then we go over to Taiwan, still climbing higher, which actually suggests technology is going to do okay. And then Indonesia, which is basically replacing China as the cheapest labor market, they're doing fine. So let me try to wrap my head around all the things I've gone through. Sectors. Transportation strong, energy strong. That's good. Those are not late cycle sectors. Those are good sectors, especially transportation. Indexes themselves. Coming in saying, hey, I don't want to regenerate lower, I'm going to push back higher, I'm going to do some sort of sideways action for a while. More than likely. That's good too, right? That's bullish. That's you get a pullback, you want to buy it. Bonds, is it an anomaly or is there really an issue? Right now, the bonds keep saying there is an issue. Exogenous news, potentially not bad. What does it come down to? To me, it comes down to the economics. You're going to get economic numbers tonight, tomorrow. Those are going to drive the market tomorrow at least, and probably for a bit longer. I know we're going to get another pullback in here somewhere, but right now, you really shouldn't be trying to trade the pullback. The market's spoken. It said, hey, if I pull back, you're going to want to buy me. And that's probably the case, and that's the way we probably should be thinking about it. And believe me, I wasn't betting this way. And when I bet wrong, I take my bets off. And it wasn't as if I was outright short. I wasn't. I made money today, but at the same time, could have made a lot more had I not had some shorts on that I was trying to speculate with. Let's see here what kind of questions we got. James tells me, oh yeah, the Winning on Wall Street. If you haven't checked it out, and you might want to, Winning on Wall Street, I did a radio spot with Mark Mandel. He's a friend up the road here in Boulder. He does a show called Winning on Wall Street. He's been doing that show forever. I mean, it's been a long time. It's probably been on, I don't know what the date, I don't want to date myself, but I know it's been on, multiple years, 7, 8 years probably, at least, and maybe even longer. I think it was on for a while, went off for a while, and then came back, and it's been running continuously since then. Anyway, I did a spot on there, did some talking. If you want to listen to it, pop in and listen to the show. I came on the second half hour. I need to, probably try to do more of these. I don't do them as much as I did for a while. Question is will I be back on next week? No. They did ask me to come back on, but we haven't set a date yet, so I don't know. It'd be 2 or 3 weeks down the road probably. But thank you for the compliment. I just get on there and talk about whatever they want to talk about, and try to give my spill as to what it's about. What neoclassical. It was actually surprising. The last time I did the show with him was probably a year ago, and he remembered that my spill was the neoclassical, and he kind of built that up, and he was very magnanimous with his comments. He was really very nice about it, calling me a good technician. So good guy. Good guy. He tries to help people, learn how to trade. We're all out there trying to, of course, give you tools and ideas and stuff like that, and have subscription services. We all do that. That's what we do for a living. But at the same time, his head's in the right place. He really wants to help traders, just as I do, and that's a good thing. That's a good thing. Because there's many ways to trade the market. All of us think our system's better. I particularly think my model is pretty good. But everybody's got their own route to the end goal, and maybe one route's a little bit better than the others, and we all think our route's the best, of course. But he's got a decent system too. So thanks for the compliment, and I compliment Mark for having me on the show. As far as what's left in terms of time here, it's really not. One thing we were talking about today, we have a trading room. And there's actually a forum here if you want to ask questions, interact with members and myself. But we have a trading room, and I'm not logged in here yet. So here, let me pop in and log in. On that trading room, if I can log in, let me get my login right. In that trading room, we have, a discussion during the day, and it's called the TNT room. And in here, that discussion is about what's happening and things like that. And you can go back 200 messages, which is usually pretty much the whole day. And there was a discussion in here today about whether or not, it wasn't about whether or not you always win on the trade. It led me to the idea of, the most important thing to me is not do you win on the trade, right? Because you're going to have, if you trade, you're going to have bad trades, period. You always are. It's the money management and the trade management that makes the difference. You have to be able to recognize when you're on the wrong side of the trade, and that doesn't mean that you're wrong for a little while and therefore I'm wrong I'm wrong and I spill out. What it means to me is the trade isn't developing as it should. For example, today, when we're looking at, and I'm going to go back to the Russell, I had a trade on that said the Russell was going to fail was going to succeed regenerating lower. It was going to fail to get over the swing point high, or the high of the swing point low. And so that led me to say, okay, as we get close to that high, I'm going to want to put some shorts on. And that's exactly what I did. I started putting them on at these levels, and my idea was I would stop out if I was wrong. Well, I was wrong. Folks, you can't let this thing get worse. If you're wrong, if the plan doesn't work, then you've got to at least come out of some of it, or come out of all of it, depending on what your plan is. That doesn't mean you failed. It just simply means that trade didn't work. And that's okay. That happens. But if you're going to make money, you cannot allow small losses to turn into big losses. Right? That's the most important thing. And trade management is something you have to develop and adhere to. Whatever that is. Maybe your drawdown is, you're willing to go a drawdown to this level. And if it doesn't trade there, you're still in the trade. That's fine. If that's the initial plan, that's fine. You need to have a plan, though. You need to have a plan coming into the trade, and then you judge that trade based on the plan and how the trade develops. And that is the secret, right? It's not about being able to always have a winning trade, because if the only way you're going to have a winning trade 90% of the time, 95% of the time, is that you're willing to take huge drawdowns. Right? You're willing to stay in this when it's down here, and if it goes down here, or wherever it goes. Right? You're willing to take 20-30% hits. Well, to me, that's not trading. That's not risk management. Right? I'd rather have a 60% success ratio or a 65% success ratio, right? Maybe it's 65. I'd rather have this than 90 if I can keep my drawdowns to, say, 2% here instead of 30% there. I'll take this any day. And you should too. That should be your objective. Risk management. Folks, I'm going to leave it at that. Have a great night. Thanks for joining me. Tell a friend, tell two. I'm LA. This was your daily TA wrap. Have a great night. Thanks for joining me, and I'll see you next time. Good night.